All right, welcome to The Explainer. Today, we're digging into a fintech company that just blew up, growing its sales almost 7 times in just 4 years. Sounds incredible, right? But what if I told you its profit margin is a tiny, razor-thin 2%? Yeah, this is the story of RNFI. And it's all about a company walking this super fine line between absolutely explosive growth and, well, extreme risk.
So it really makes you wonder, what does a high-growth company actually look like up close? Is it just about those big, flashy sales numbers? Or is the real picture a lot more complicated? A mix of incredible opportunity and some equally significant dangers. That's the tension we're going to unpack today.
So first things first, to really get what RNFI is all about, you have to understand the massive, massive shift happening in its home market. We're talking about a digital tidal wave that is changing absolutely everything.
For years now, India has been on this huge national mission for what's called financial inclusion. The goal is to push banking and digital payments into every single corner of the country. And this big move away from physical cash, well, it creates this enormous tailwind for any company that can help make it happen.
Okay, so where exactly does a company like RNFI fit into this whole revolution? What do they do? And most importantly, how do they actually make money in this new digital world?
At its heart, RNFI is really a facilitator. It's not a bank. Instead, it's a tech platform that connects businesses, and through them, their customers, to a whole bunch of financial services, all through a single app and portal.
Here's a simple way to think about it. RNFI goes out and builds this giant network of agents. These are often just small shopkeepers in rural or semi-urban areas. And by using RNFI's platform, they basically become the local financial hub for their community. They're the spot you go to for everything from cash withdrawals to paying your bills online.
And their business model is pretty straightforward. They just take a small cut of every single transaction. Whether it's a banking service, a digital payment, or even just signing up a new agent to the network, RNFI earns a fee. This lets them build a really scalable, asset-light business that can grow like crazy without needing tons of physical buildings.
All right, now for the fun part. Let's get to the numbers, the kind of explosive performance that really puts a company like this on the map.
Just let that sink in for a second. Sales grew nearly 7 times over in just 4 years. That isn't just growth, that's hypergrowth. And it's the kind of headline number that makes everyone sit up and pay attention. Okay, so here's the data that backs all that up. You can see the sales just climbing steadily, right? From 134 crores to an estimated 459 crores. But, and this is really important, look at the net profit. It actually takes a dip, and then it's projected to more than double in just 1 year. That little roller coaster ride in the profit column, that is a super crucial part of this whole story. And this is where it gets really interesting. While their revenue grew a very respectable 13%, the profits are projected to multiply by 2.5 times. Now that is a huge signal that the company is getting way more efficient and that the benefits of its scale are finally starting to kick in.
Now, to understand what people are willing to pay for this company, you've got to know one key metric: the price-to-earnings ratio, or PE. All it is really is a simple way to see how expensive a stock is. And a high PE just means investors are betting big on a lot of future growth. So the typical PE ratio for this kind of company is somewhere between 20 and 50. RNFI is trading way up there at 43.5, right near the top of that range. What this tells us is that the market already sees the potential here, and that big expectation is already baked right into the stock price.
So we've seen the incredible growth, it's exciting stuff, but like we said at the beginning, that's only half the story. Every high-growth company has a flip side. So now, let's dig in and weigh the risks.
So the argument for RNFI is pretty powerful. They're making some smart acquisitions to grow even faster. They're perfectly positioned to ride that national digital push we talked about, and the founders still own about 65% of the company, which is a great sign. Plus, you've got that clear potential for profits to just take off as they get bigger. But then, there's this. The case against them is just as strong. You've got fierce competition from absolute giants like Paytm and PhonePe, the massive challenge of making those new acquisitions actually work, the fact that smaller company stocks can be super volatile, and that high valuation we just talked about. And one really, really critical point?
So let's put that into perspective. For every 100 rupees that come in the door from sales, RNFI gets to keep just 2 of them as profit. 2. That is an incredibly thin margin. I mean, there is just zero room for error here. And it makes them super vulnerable if a bigger competitor decides to start a price war.
Okay, so we've seen the mind-blowing growth and the pretty serious risks.
Where does that leave us? Let's tie this all together and get to the final verdict. The final rating from the analysis we're looking at comes in at 4 out of 5 stars. Now, that's a pretty strong endorsement, but that one missing star is there for a reason. It's acknowledging all those very real risks we just went through. So it's a vote of confidence, but, a cautious one.
And this quote just sums it all up perfectly. RNFI is not a safe bet by any stretch. It's a potential multi-bagger. That's an investment that could multiply in value many times over, but it's only for investors who can really stomach high risk over a 3 to 5 year timeline. Everything, and I mean everything, depends on if they can fix those thin margins as they get bigger.
So we're left with this one big question. RNFI is definitely riding a powerful wave of digital transformation, no doubt about it, but its entire business is built on pennies. The real question isn't just if it can keep growing, it's whether it can ever turn that incredible growth into sustainable, defensible profit. And that's something only time will tell.